What is up, everybody, and welcome to Futures Trading with NinjaTrader. I'll be your host, Zunaid, and we've got a special guest hanging out with us here today. But till we introduce him, let's go ahead and play that intro. What is going on? We've got Tom Schneider here, who is a CMT and also a senior education and training specialist over at NinjaTrader. Tom, thank you for coming on today.
Zunaid, thanks so much for having me. I've enjoyed your discussions with Jim, and it's been always a treat to be able to step into Jim's shoes and certainly discuss everything markets with you.
Hey, I appreciate you. And let's go ahead and get right to it. I'll go ahead and share your screen right here. And let's not waste any time. Tell me what you're looking at here.
Okay, so real quick, E-mini
What's up?
S&P. This is where we always start. So it's one of the most traded contracts right now, trading about 720,000 contracts this morning. What I look at as a technician, I first thing I look at when I'm looking at the intraday charts is I look at pivot points. Where are the pivot points? And as we see, kind of tight trading overnight into the morning, Europe opens up, nothing really moving this market. But then at some point, eight in the morning, this market just turned down, right? And I'm looking at pivot as a guidance. Now, pivots are based on the previous day's trading. I think they're essential if you're a trader. And in fact, in my previous roles, when I would explain to traders, hey, you've got to be looking at pivot points, it was the only thing that they would come back to me later and say, thank you for telling me about pivots. I mean, it's such a great tool to know what other traders are looking at. So I always look at the pivots. And, it could be a pivot trading day today. We traded down to the support level S1. And again, S1, R1 are just labels, support and resistance. They're levels around the pivot. So what I like to do is I look to see how far can we go in either way. When we get a direction, where might we find some support or resistance? We found support at S1, and right now we're trading through the pivot back up to R1, which could be holding as resistance.
Now, when it comes to pivot points, are you able to briefly tell us how they're calculated? Like, is it kind of like Fibonacci's, or is it just the high and low of the day yesterday or the previous session? How does that?
So that's a great question because it is based on yesterday's high and low and close. And it's really the previous trading days, right? Yesterday was Sunday. We don't have trading. So what we're looking at is the three most important points on a daily chart on a bar, right? The high, how high did we trade? How low and where do we close? It's an average. So the pivot, this pivot right here is an average of those 3 points. Very simple to calculate. And then the R1 and R2 are a factor of the previous trading day's range, either off of or around the pivot. So the calculations, you can Google them. They're pretty standard. But I know that the support level and the S1 to the R1 is the previous day's trading range. So we've already exceeded the trading range from Friday. And then I know that R2 is one trading range off of the pivot on the upside. And then R3 is 2 times that range. So it's just a way that before computers, floor traders could quickly calculate some levels to place orders at, the next day.
Yeah, well, now the machines just kind of do it for you. So that's always nice. And of course, I appreciate everyone that's just joined us from live trading. We've got Tom hanging out with us here today. So it looks like, we talked about on live trading that SPY from the previous close on Friday. That's exactly where we rejected from. But are you in a trade here at all? Are you planning on being in a trade? Any levels you like to get in long and or short here?
So, we like to trade, and Jim and I talk about this. We like to wait for the market open, come in, see what the big investors are doing, the big traders are doing, see what direction they're in. So we give it a couple minutes. Right now, I'm not in a trade, although I would use these levels as support and resistance. Is looking at R1. It looks like R1 is held here. So I might place a short right there only because we've tested it a couple of times and hasn't gotten much past there. So we've established kind of a ceiling. And then if it trades back up there, I might put in an order to short. And then if it trades down, I'm looking at an area. I'm sorry, did I say support? I meant resistance. There's resistance
Yeah,
up
yeah.
here. I'm looking for support either at the VWAP, which is this average line right here, or maybe even down to the pivot, which is not quite far off.
Now, if you go ahead and get short around 41.46, where do you think your stop would be?
My stop definitely would be at R2,
Okay.
41.6. Again, I'm not, this is a E-mini S&P. We do have
Right.
the micros, which
Right.
trade very similarly, and I might put in several different entries and stops and take
Right.
profits as I layer in and layer out of my position.
Got it. Got it. Okay, cool. Now let's go ahead and kind of move on to let's talk about Bitcoin because I know that's something you
Sure.
and I had a conversation on early on. And I've always gotten Jim's take on it. So I want to get your take on what you see in Bitcoin. And I believe you may have also had a trade on this already for the day.
Exactly. So we did get on in the morning. Let me just, and I was looking at the nano earlier. I actually got into the nano, but I do want to talk about micro Bitcoin because I do have a daily chart. And the thing about the nano is so new. It's only about a month old. So there's
Yeah.
not a lot in the daily charts. I like to, as a chartist or a technician, I like to look at as much data as I can. So I'm just going to bring up really quickly. I was looking at this earlier this morning. This is a daily chart of the micro Bitcoin. And what I see right here is I see resistance right at the 50-day moving average. This is an exponential moving average. I see resistance that's right around just shy of 25,000. And
Right.
right beyond that is a retracement from the high in March to the lows back about a month ago. So I see some additional resistance at 25,575. That being said, I am bullish according to some of the indicators. The MACD turned bullish back a month ago. And we see a slow, gradual uptrend here. I'm not saying it's going to be a straight shot to the moon, right? We can't say that, of course. But I do see that the MACD is telling me, let's be bullish and let's just expect some areas of resistance. Now, that resistance might last for a bar, a 2 bar, maybe 5 bars, etc. But it
Yeah.
doesn't mean it can't be overcome.
Now that yellow line, is that MA? Is that a 200? Is that what is that?
That's a 50-day exponential moving average. So I
Okay.
like to look at the 50 and the 200. And one is like, you exceed the 50. Okay, change in direction for
Yeah.
I would say midterm, but the 200 is the big battleship we want to get over. If we get over that, that's a little stronger indication that that trend is correct. And so we've got a ways to go to get to the 200.
Now, if it goes ahead and crosses above, let's say 2,600, though, if it gets past the 2360% line on the Fibonacci's, would you consider going long with like a target of around, say, 30,000? Because I'm a big fan of whole numbers. That's why I bring out 30,000 ish as the target. Or are you kind of waiting for consolidation and then you want to make your move?
So I would look at kind of the first example is what I'm looking for, right? So a break of that 50-day moving average, that 23% retracement level, whether it's 25,000, 25,600, a break of those, yeah, I would be definitely more bullish. I might put in an entry there and say target that 30,000 because it's coming up against that 38% retracement,
Yeah.
which is again a big Fibonacci number. Plus, you see all of this consolidation here. That tells me that there's just a lot of interest there. So your target might be 30,000. We might see a lot of resistance there.
Now let's move on to because I was driving the other day and I noticed that gas is coming down. So let's go ahead and take a
Sure.
look at some oil if we can. Any tickers that you're a fan of there as we look at
Right.
crude oil?
So this is West Texas intermediary, and this is the September contract. And I've been bullish right around June, even into June, we saw this. We're wildly above our two moving averages, the 50 and 200. We were pretty strong on the MACD, but then market said, no, wait a minute, we've got demand weakening, so we're down in this downtrend. Um, we could go sideways for a little bit, and I would be a little more bullish, except for this bar right here today. Just what a dominant candle down. But
Yeah.
we're between the 50 and the 200. The fact that we tested the 200 and bounced up, to me, that's an indication that we might be easing up on this downtrend. Although, of course, today being the exception, I'd expect to see some resistance around that 100 level. Again, a nice psychological number.
Yep. Yeah, that's exactly the level that I'd be wanting to kind of have it surpass. And then we can think about it going long with targets around 105, 110, 115, and all that. Good. Look at how well is the blue line the 50 for you there?
This is a 200. So this is
200. Look at
again,
how well that bounced. I think it was on 15th or 14th.
right. So if I can see the low is at
Yeah,
87.64 and the moving average was 87.63. I mean, almost to the penny.
that's
Um,
incredible.
it is, and this is again the I won't say power, but I will say the thing that kind of gives me awe is how precise some of these indicators are, that we get so close to these numbers that you think, I mean, that's 64, 63. Who cares, right? It's not an 85 flat or 80, 90 flat, but it is indications to me that somebody's paying attention.
Yeah, no, that makes perfect sense. And it's kind of like a self fulfilling prophecy as well. Hey, I've heard others look at it, therefore I'm going to look at it, therefore I'm going to buy it from it. And of course, everyone just kind of piles on top of that. Let's go ahead and take anything on the Q side of thing on the futures that you're a fan of.
Oh, for sure. So Qs are right now, I think just again looking at the daily charts. We're hitting upon a 50% retracement level.
Yeah.
We're about 90 points away from that. That's at 13,150 roughly. That's an area where we see some consolidation from May, and we saw a little bit of resistance here around 12.9, which he's overcome today. So that's good. But I'm looking at maybe some more resistance at 13,150. And again, that big battleship, that 200-day moving average, right around the 61% retracement level. Man, that might be hard to get, 13,650.
Now you've got a few indicators that we've already talked about, right? On this
Yes.
one, obviously, since it's a daily, you don't want to look at VWAP. Is that right? You only like to look at VWAP on an intraday?
Correct. And the reason is, I'll tell you why I like the VWAP on an intraday is because that's what the institutional traders are looking at to gauge themselves, right? So when I look at VWAP, if I'm I'm just trading, right? I'm not really a prop trader, but I'm just executing orders for my institution. I get graded on how well I execute those orders, right? So a big order comes in, I'm not putting everything in that, give me the whole order. They're spreading it out over time. And what they're trying to do is get a better price than VWAP. So it really is something that comes into play when we're trading during the day. So as a retail trader, as an individual, if I understand that, I understand that the market might be trading back to VWAP, or traders are trying to get in a better price than VWAP. So funny things happen around VWAP. It's good to be aware.
Yeah, no, that makes perfect sense. Now, are there anything else that you look at in terms of indicators intraday? I know you've got the RSI there. Let's say you've got the MACD as well. You talked about VWAP. You've got the 50 and 200. Anything else that you prefer to look at? Because I think I saw some
Right.
Bollinger Bands or
Yeah, so the Bollinger Bands, this is similar to the Bollinger Bands. I like to put one standard deviation bands at least on my VWAP. So
okay,
let's just go back to the micro Nasdaq.
yeah,
It's analogous to the Qs, right? And so here I have two standard deviations around that VWAP. And what we see a lot of times is when we see moves, we'll see one of the bands act as support or resistance on the upside. And so sometimes you can say, well, if this band isn't exceeded, if it collapses, maybe it goes to the next band, right? So it's a
yeah,
little bit of a band trading. Um, Jim has turned me on to these moving averages, keeping them on a different panel, because
hmm,
really the moving averages, I don't really care what their value is. I want to know if they're getting closer together or farther apart. If they're
yeah,
getting farther apart, it usually means we're trending. So it helps me if these start to get close together, maybe the trend is coming to an end. Um, and one other thing, volume. Okay.
yeah,
So volume to me is very important, because in intraday trading we have what's called the volume smile, and I don't know if you've talked about this before, but the volume smile is, again, beginning of the regular trading hours. We have a lot of interest at that 9:30 minute, 9:30 bar, let's say, and then as time goes on, volume comes off and we see it lower, lower, lower. And then at some point during the day, maybe after lunch, the volume increases slowly, slowly to finish strong at the end. So what that means to me is, especially at the end of the day, I like to look at it because I want to know if we're trending and I know there's a lot of volume left to be placed, then that trend might extend. So that helps me if we're trending at the end of the day.
Gotcha. And I appreciate the insight on that. Now we've talked about crude oil, we've talked about Bitcoin, we've talked about the Qs and the ES, but let's go to now talk about gold. What do you
Sure.
have there for me?
So gold, and this is an intraday chart of gold. So we are looking at, pretty much unchanged to get today. Not a really nice distribution on the volume. So we have this kind of funky, all this trading at the top and then not much above it. But our point of control, this is where the most trading has happened. And we can just see that. I mean, we can see how many candles traded through that price.
Yeah.
That usually the point of control acts as somewhat of a magnet, but not always. And in this case, what I'm seeing is, again, those standard deviation bands, we're trading, acting as support and then trading to the next one and then going back to support, maybe failing, going to the next level of support. So interesting to know those change. You have to keep your eye on those. But what I'm seeing is, if we're looking at gold and we're saying let's continue this downtrend, I'm targeting a couple areas, right? The pivot and then the external bands, right? This is a one standard deviation band right here.
Yeah.
We just bounced off of it, and then maybe if it fails, we go down to the second one. So a little bit of a wide trading day today on gold.
Now, is there any levels that you would want to look at on the daily on gold to try to get in, or are you more of an intraday trader when it comes to this one?
For sure, with gold, I definitely want to know what the kind of the bias is, right? So looking at a daily chart in gold, excuse me, as I move things around, what for I don't know, a month or so, we were kind of sideways, trading sideways, and then the MACD, the moving averages gave us an indication here when the 50 crossed below the 200. Hey, you know what? Maybe we're not sideways anymore. So definitely bearish, but we may have found a little bit of a low here.
Yeah.
So right now, I am overall bullish on gold. Although today being a doji like this, market hasn't found direction. So overall, I would be bullish on gold, expecting some resistance up around the 1800, 1804 level. And again, this will change as we trade. Tomorrow, it'll be a little bit lower, most likely.
Now, when it comes to the conversation that Jim and I have in the past, and of course some viewers from the chat as well, is tick versus minutes, right? So like when I trade stocks, I like to look at the 10-minute, sometimes the 5, but mainly 10 is what I try to focus on once the day has already gone in. What about you? Because I see you don't have ticks. You're looking at the minute mark as well.
Right. So, and the reason for that is that's a great question. I get this quite a bit. And there are people, traders, who have made, their focus tick charts, and they do it very well. What I look at tick charts as a solution to is that idea of, well, when we started to have overnight trading, we started to have electronic trading, we could create these tick charts that eliminate the time gaps, right? So in a 10-minute chart overnight, back in the day, you might not have a trade for 10 minutes. And again, that's not true now, and certainly the stock index futures. But when I'm looking at the charts right now, I'm looking at it pretty much during regular trading hours. So there's no fear of missing a gap in the time. We'll always have trading during the day. But certainly for the tick charts, it eliminates any time gaps, either in markets that aren't as widely traded as the stock index futures, or overnight, where there just might be a couple of bars that don't happen on the minute chart, but certainly you have a continuous chart. And when you have a continuous chart, your indicators will have nice flow to it.
Now, when it comes, you talked about you like to, you look at it mainly during the sessions of trade, 9:30 and 4 on the Eastern side. Are there any other time frames that you feel like, hey, this is where futures are a little bit more active? Because I know sometimes when they open at like 9 p.m. to 9 o'clock, right? I'm looking at them, trying to trade them, but they're just kind of bouncing right near VWAP. There's not a lot of movement whatsoever. So is there like a time frame besides the market open that you feel like you can trade? And I'm talking about the SPY minis here, or the ES.
Right. So let's look at e-mini, because if we were to go back, I would definitely keep an eye on, first of all, the 4 p.m. to 5 p.m. hour, right? Because we are extended past regular trading hours in the cash market. I would also look at different opens, especially the European Open. European desk opens in London and in Germany, etc. And they have interest in the spiders. They have interest in E-mini futures. They have interest pretty much in the US market. So there might be a little bit of direction there. And generally, if you were to look at it, barring any event or any news that is radical, you generally see kind of the same patterns happen, right? Europe comes in, knocks the stock down, and then, barring again any 7 o'clock, 8:30 report, you might see the U.S. market come in and bang them back up. You see that
Yeah.
more in the currency markets, but I would be aware of the European Open, and I would look at that 4 p.m. to 5 p.m. hour, especially now with earnings.
So let's talk about earnings. How do you typically play earnings season? Are you trying to position yourself ahead of it? And this can also include the Fed as well.
So with earnings, I just want to be aware which indices will be affected by the earnings coming out. And we saw a classic example of that last week. We had two FANG stocks, I believe it was Amazon and Apple, report within like 45 minutes of each other after hours. And on the micro Nasdaq futures, or the Nasdaq futures, you could see that bump twice in that hour, right? Whereas the E-mini Dow didn't have quite that reaction. The E-mini Russell didn't quite have that reaction. Now the S&P did, right? Because one of the, I believe, which one is it? Apple's in the S&P, or in the, whatever it is. You have to know where the companies are and which indices they affect. This week, there's only, from what I could see, there are only two stocks in the Dow that are reporting before markets. So, this might be a week where Dow's not going to be as affected as, let's say, the Russell 2000 futures, because it's a lot of small caps.
Now, when it comes to so the thing that I love about trading when it comes to futures is that the spread is so tight, right? There's not really a lot of what's it called?
Arbitrage.
Yeah, arbitrage,
Yeah.
slippage, or anything like that whatsoever,
Right.
right? You're kind of getting a very tight price. And of course, that's on the mini as well. Are there any tips in like some instruments to kind of stay away from because you feel like the spread is a little bit not as friendly to the retail trader?
No, I don't find that. And again, I'm coming at it from a different tack. I'm focusing just on the futures. So I'm looking at it from a technical aspect. I'm not so concerned what the fair value of the S&P is. I'm not so much concerned that there's going to even be a difference in the different types of contracts, right? The E-mini versus the micro. I'm not aware of anything that's something that we can take advantage of neither. So if there is a little bit of slippage, I'm not aware of, again, for a retail trader to be able to take advantage of that. I really don't think it's there.
I got you. Now, for me, whenever I trade, I have to kind of have certain things happen on the chart in terms of price to get in the trade, right?
Sure.
I understand so much of trading is also about seat time as well. And it's not just like, oh, cool, these three things happen, I'm in the trade, right? I get that.
Right.
But if I had to ask you, what are like maybe 2 to 4 things that something happens, that something needs to be on the chart for you to be like, hey, I'm going to go ahead and get into a position here? Is it like, hey, VWAP and 200 need to be a here? Like, what 2 to 3, 4 things do you need to see before you enter a trade at all?
Right. So I've got, in this chart, I'm looking at the E-mini S&P. Let's just take a quick look at NASDAQ because it seems like that might be interesting. So what I like to see are what levels are important, right? So there's the pivot levels we've talked about. And pivots for me are really guides to where the market could go. I'm not always trading them necessarily in a sideways market. Today, yes, I did, just because I wanted to get a quick take profit. But really, pivots for me are when the market moves. Where could this go? It's like being in a forest. If you don't have a map in the forest, you don't know where you're going. But if you had a sign that said, hey, the exit of the forest is half a mile from here, at least you know, and that's where you should go. What I like to see is, I do like to see areas of confluence, right? So if I look at this area where I took a trade in the morning show, I said, if this dotted line is the previous day's close,
Yeah.
and it was coinciding with the VWAP band. Okay. It isn't necessarily about which two precisely. It is about maybe two or three happening at the same time, right? So I said, you know what? If this doesn't hold, we broke it the previous bar. If we come down and test it again, let's go long. And that's what happened. And so I said we could take R1 as a target, really conservative. We have plenty of time. Let's take R2. And that's what happened. So I like to see like coincident levels happening. I also want to look at maybe a momentum indicator like CCI, like MACD. And if this at the time was bullish, if it were bearish, that would be a harder nut to swallow to say, I'm going to go long
Yeah.
when my momentum saying we're not going long.
I'm just looking at the charts here. But actually
Sure.
before that, I want to go ahead and get to your tip of the day as well. So if you get that ready, I'll go ahead and play this intro. What do you have for us in terms of the tip of the day?
Tip of the day. So sorry, that was a little
intro.
quicker than you're way
No
faster
worries.
than I am. So
No worries.
let's take a look at this. Tip of the week. So on the E-mini S&P,
Yeah.
we've talked about this ascending triangle, and I'm going to blow this up just a little bit. You'll see here, maybe you could see it, these two blue lines that indicate an ascending triangle. And what the ascending triangle is pointing out is that we have a ceiling here that we couldn't get past, and we have rising lows. Okay, so rising lows is bullish. A ceiling is bearish, right? We can't get past it. That's bearish. One of them's got to give, right?
Yeah.
So what we noticed was as we get closer and closer, something either is going to break out or it's going to fall. Well, in this case, we broke out. We broke out here. We did come back to it, and we broke out again. So why do we care? Well, an ascending triangle, or any pattern for that matter, can give an indication of where the market can go. It's called a measured move. So real quick, I'm just going to draw an arrow, and bear with me as I get that arrow. I always forget where that is. Arrow line, right? And I'm going to look at the first place we tested that top and mark it to the low at that point of the triangle that I'm drawing, right? So I've got this arrow. It might be a little hard to see. I'm going to copy it. So I want to copy that, and I want to move it to the breakout spot. We'll just take it over here. And I've already pre-marked this. This is a nice psychological number of 4,200.
I like
right?
that.
So the break of this ascending triangle on the E-mini indicates 4,200 as a target. Now, there's no time consideration. I know there have been studies that say this should happen within X number of bars, but I don't really care about that. If it happens today, tomorrow, or next week, or next month, fine. But that's what that ascending triangle indicates, 4,200, nice psychological number.
Where would your stop loss be, if I may ask?
So if I broke out, I would most likely use one of the dangling wicks, as Jim likes to call them, either down here as a more recent one, or we could go to the low of the triangle. Just, it depends again on your risk tolerance. This is a daily chart, so it's a little bit of a longer tolerance. I'd probably go with this dangling wick here. And if it did trade down back there, that would probably reset my thinking about my upside target.
Would you add?
Would I add?
Would you add, like, say it gets to like 3,800, right? Would you add? So the reason I'm asking that question is not like, oh, hey, you're in a loser, would you add to your losers? I'm more so asking because the way that I like to trade is like, if I know my risk off, let's say, is 3,750s, I'm okay adding closer to 3,800 because my risk reward then is much better. Does that make sense?
Yes, definitely. And that would be if my conviction based on the indications still indicate we're bullish, which probably would be the case. So to go from here down to 3,800, let's say, depending on the time involved, we might see that MACD turn over, and which would be a bearish indication. So I'd have to rethink that. This is probably in play, for a while. But if this MACD turns down, or this RSI starts going south and getting below 50, then I'm rethinking my entire paradigm.
Got it. Now you guys do trade every morning. So if you could tell our viewers a little bit about that, I believe it's at www.ninjatrader.com/events. The info will be in the description as well. But if you could just give us some insight on what shows you do and the times and different things like that.
Sure, real quick. Every morning, 9:15 Eastern time, Jim, myself, one or both, will talk about the opening range. We'll look at trade setups. We'll see what's happening in the week ahead, the day ahead, and then we'll recap at the afternoon, see if there's anything available at 3:15 in the, Eastern time. Also, if you go to that events page at ninjatrader.com, you'll also see our midday shows that we have during the week.
Awesome. Thank you so much, Tom. Really do appreciate you hanging out with us. And of course, Tom is a senior education and training specialist over at NinjaTrader, CMT certified as well. So that definitely gives you the insight that he knows what he's talking about. I promise you that. Thank you so much again, Tom, for joining us here today.
Zunaid, thanks for having me. It's been a great time. Too fast.
Well, hopefully we get you back here soon. Take care.
You too. Take care.